Have you ever looked at the price of something and just thought, how? How is that worth that much? Well, today we're going to get into it. We're diving into a really fascinating and maybe a little controversial idea that sits at the heart of some of the wildest investments out there. It's called the greater fool theory. Let's figure out what it's all about. Wow. Okay, let's just start right there. This quote, it really just cuts to the chase, doesn't it? It frames this whole conversation perfectly. We're not just talking about money and charts here. We're talking about a massive, global psychological experiment. So yeah, let's dive straight into this experiment. What are we actually talking about when we say there are assets out there that seem to break all the normal rules of value? Well, you know the main players here. We're talking about things like Bitcoin, of course, all those meme coins that pop up, and a whole bunch of other super speculative assets. You see their prices go to the moon, and you just have to wonder, what is actually holding them up? And that's where we hit the core of the puzzle. See, unlike a stock, which is a tiny piece of a real company that makes real profits, or a house you can actually live in, a lot of these assets don't have what we call intrinsic value. They don't make any money, they don't produce anything, you can't really do anything with them in the traditional sense. So, if the price isn't based on profits, or utility, or anything you can touch, then what's left? It turns out their crazy prices depend entirely on one single, incredibly powerful thing. And that one thing is belief. That's what this is all about. This has way less to do with math and spreadsheets and a lot more to do with psychology and what we all collectively decide something is worth. Which brings us right to the million-dollar question, doesn't it? If an asset doesn't create any value by itself, how on earth can it be worth thousands or even millions of dollars? Well, the answer comes from a very old, very human idea about how markets work. And here it is, the greater fool theory. It's a simple name for a really profound idea that explains why perfectly smart people will pay a ton of money for something they might even suspect is overvalued. And this isn't new, by the way. This is the same kind of thinking that fueled things like the Dutch tulip mania hundreds of years ago. So the theory is actually pretty straightforward. You're not buying an asset because you believe in its fundamental long-term worth. Nope. You're making a bet on people. You're betting that somewhere out there, there's always going to be someone, the greater fool, who will be willing to pay even more for it than you did. So how does this play out? Well, you can think of it as a three-step process. First, you buy in, even if the price already seems kind of crazy. Then you just wait. You watch as hype, speculation, and that powerful fear of missing out, FOMO, drives the price up, up, up. And then step 3, the most important part, you sell it to the next person who's convinced they can do the exact same thing. Your profit is literally their optimism. And that's the absolute key here. The entire price is floating on nothing more than the collective hope that you'll always be able to find that next buyer. The price has totally disconnected from any sort of reality. It's basically a high-stakes game of hot potato, but with billions of dollars. But, any game like that, whether it's hot potato or musical chairs, eventually the music stops. So what happens when the supply of new believers, of new fools, starts to run out? That brings us to the end game, the last fool standing. There's this one analogy from the source material that just nails the feeling perfectly. It's like being on this date. On the surface, it all sounds exciting, right? An entrepreneur. But when you dig a little deeper, you realize, oh, the substance just isn't there. And that's the whole problem. Right? The illusion of price only goes up is amazing. It works perfectly and sucks more and more people in until suddenly it doesn't. All it takes is for people to start getting nervous, for the belief to crack, and that chain breaks. The pool of greater fools just dries up. And that leaves us with one final and honestly kind of sobering question to think about. In this massive global game of financial musical chairs, when the music finally does stop, who's left holding the asset with nowhere to sell it? Who ends up being the last fool?